If you're holding on for dear life, then this video is for you. Welcome back to the Maverick channel where we talk about real-world use cases of cryptocurrencies. Today we're going to cover a very fundamental point of why we hold here in the cryptocurrency space so that you don't get overwhelmed by the price actions. So if you're into this kind of content, don't forget to hit that like and subscribe button and make sure you stay tuned for the whole video. So before I get into today's video, watch this short clip by Andreas Antonopoulos and you'll have a glimpse of what I'm trying to talk about.
And now that has changed. On January 3rd, 2009, the world changed because some person created a peer-to-peer protocol, a flat network with no servers, all clients, that is able to express money as a content type. As internet professionals, you may understand what I mean when I say money as a content type. Money that is expressed purely as data that can be transmitted using any communication medium that can convey information. A Bitcoin transaction doesn't need to be transmitted over the Bitcoin network, although that's a convenient way to do it. You could encode it in Skype emojis. You could write it up and put it in a Craigslist ad. You could post it on Facebook in the background of a picture of kittens playing with yarn. Money as pure information on an open network that is simultaneously uncensorable, open to anyone, neutral, and global. There are no borders on this new technology, just like there are no borders on the internet. Everyone can access it because it is not a product. It is not a company. You do not need to register for an account. You simply download the client. And a Bitcoin client is very much like a web browser. It is the user interface that speaks the protocol to other Bitcoin clients out there. And as soon as you download that one application, you can join a global economy. And that global economy is open to anyone of any race, religion, creed, ethnicity, age, anywhere in the world. For most people, this concept hasn't yet quite sunk in. The children born today will not know a world in which banks exist.
Guys, and that is why we're here in the cryptocurrency space. This is not about moon this is going to the moon, this is going to the... We're talking about real-world use cases, people's problems being solved in an ever-growing, very strange global system where a few people are controlling all the resources. We're talking about transfer of power or some bit of say to the so-called proletariat in this ecosystem. We're talking about taking back something that is supposed to be yours. That is why we're here. It's not about moon boys and this art selling for this. That's part of the process. That's part of creativity. That's part of this whole cryptocurrency space, guys. Do not forget why you're here. When you look at the charts and everything is red, that is not why we're here. Understand the technology, understand the companies you're invested in, especially the teams. What do they believe in? Where do they come from? Are they here just to make money? Are they here to help the world move forward? And when you understand that, then you truly understand the core aspect of this. And that's why the bear market is happening the way it is, because it's calling out on all these projects that aren't supposed to be here in the first place. So guys, this is the first thing, the Bitcoin white paper. This is the thing that started it all. The guy that you just saw, that's Andreas Antonopoulos, who's the biggest spokespeople of the cryptocurrency space, especially Bitcoin. One of the best educators you could ever find out there. This is the first white paper written by Satoshi, or rather the white paper by Satoshi Nakamoto, released well, back then in 2008 actually, or 2009 or 2008. Around that time. So the abstract is a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. Digital signatures provide part of the solution, but the main benefits are lost if the trusted third party is still required to prevent double spending. We propose a solution to the double spending problem using a peer-to-peer network. So the network timestamps transactions by hashing them into an ongoing chain of hash-based proof of work, forming a record that cannot be changed without redoing the proof of work. So forming a record that cannot be changed without redoing the proof of work. I've repeated that. The longest chain not only serves as the proof of sequence events witnessed, but proof that it came from the largest pool of CPU power. And we're going to look at later what that means. As long as the majority of CPU power is controlled by nodes that are not cooperating to attack the network, they'll generate the longest chain and outpace the attackers. So the network itself requires minimal structure, messages that are broadcast on a best effort basis, and the nodes can leave and rejoin the network at will, accepting the longest proof of work chain as proof of what happened while they were gone. Guys, it's very important not to forget the fundamentals. I'm not going to read this whole white paper, obviously, but I just wanted to introduce you to the introduction. So the introduction obviously goes into a bunch of things, commerce here and there. We need to prevent intermediaries. That's why the network is here and so on. So a little segment of the introduction is here. What is needed is an electronic payment system based on cryptographic proof instead of trust, allowing any two willing parties to transact directly with each other without the need for a trusted third party. So transactions that are computationally impractical to reverse would protect sellers from fraud, and routine escrow mechanisms, so locking up the money, could easily be implemented to protect buyers. And we can see this with local Bitcoin, one of the best over-the-counter trading platforms for Bitcoin. So in this paper, we propose a solution to the double spending problem using a peer-to-peer distributed timestamp server to generate computational proof of the chronological order of transactions. The system is secure as long as the honest nodes collectively control more CPU power than any cooperating group of attackers. And that is the rest of the white paper, infographics. It's short, you can read it, very easy to understand. And guys, this is where the cryptocurrency movement started from. So from here we see other key coins, Peercoin, XRP, Ripple, others, Dogecoin, Ethereum with the smart contract. So Ethereum was the first successful, or rather first successful iteration of a use case or blockchain outside of just transactions. So enter smart contracts and then other things as we move forward. But in terms of the fundamentals, this is what you're seeing on the screen. This is the Genesis block, essentially the first block that started everything on Bitcoin. So the block was mined on January 4th, 2009 at 1:15 a.m. GMT by an unknown party, obviously, Satoshi Nakamoto. It currently has 740,671 confirmations on the Bitcoin blockchain. The miners of this block earned a total reward of 50 BTC, which is currently worth $1 million. So they have a ticker here which adjusts depending on the Bitcoin price. I checked this about 30 minutes ago and it was $1.5 million, and now, yeah, we're in the bear market. So the reward consisted of a base reward of 50 Bitcoin, which is that, with an additional 0 Bitcoin reward paid as fees because there was no other miners. The network was just starting, and the first or the one transactions which were included into the block. The fees of the first transactions included in the block. So the block rewards are known as the Coinbase rewards, were sent to this address. So they have an address that they linked here, which you can see here, and this stuff cannot actually be sent out. So a total of 0 Bitcoin were sent in the block, with the average transaction being 0 fees. Learn about more how blocks work. So you can learn about more how blocks work. They have some nice articles in here. Now, if you look at briefly, this is how a blockchain transaction, this is how a blockchain is. If you look at a block, this is what it looks like. You have a hash, which essentially comes from the previous block. So this block, being the Genesis block, had to have the first hash, which indicates, I guess that's why it's 000. Guys, you'll have to ask Andreas Antonopoulos of the details of this. But the point is, confirmations were this currently. Timestamp is this 2009. You can see January 4th. And you can see the height 0, which means it was a first. Then the next one will be 1, 2, 3, and so on. So the miner, unknown. Number of transactions, 1. Difficulty, 1. Guys, remember the difficulty. We're going to blow your mind with that one. The Merkle root, those are other details that go into that. The version is that, beats this, weight this, size that. The number used only once, which is the nonce, which is another way of tracking those transactions. Transaction volume, 0. Block reward, 50 Bitcoin. Fee reward, there. It's right there. So all these can be confirmed on the blockchain. Can never be altered, can never be removed. So I guess these people want me to sign in, but hey, this is support.blockchain.com. I guess they can offer more information. But if you want more information about this other address, basically some people sacrifice their Bitcoin, I guess because they want to be a part of history. So they send Bitcoin to this first block, but this Bitcoin cannot be removed. It cannot be sent anywhere. So it's just going to be locked up. So I guess some people send a few cents in here. Guys, don't do anything crazy. because you want to be a part of history, right? So, I mean, you could send maybe 0.0001 cents to show that you educated yourself and you're able to send a transaction to that block I guess as a form of sacrifice. I don't know. People get cultish with these things sometimes. So, there's another extremely useful resource, which is the bitinfocharts.com. So here you can see the tickers of what's happening with proof of work chains. For example, Bitcoin, Ethereum, and others with their infrastructure like XRP, Litecoin, Bitcoin Cash, Dogecoin. I guess they included XRP because it's one of the first. It has a large following. They use a different consensus mechanisms, but why not? So let's look at Bitcoin. Let's look at that hash or some of these details here. So you can review what's happening. For example, transactions, this number of transactions, when they were last sent, average per hour. So every 10 minutes, a Bitcoin block ticks on average, sometimes within seconds, sometimes within an hour, but you get an average. So you can get some of the transactions per average and you compare with other blockchains as well. You can look at the block time, which is average every 10 minutes. So you can see 10 minutes, 59 seconds. The block count, we're at 740 million. So from zero, we are 740,685. And the blocks last 24 hours, 131 in the last 24 hours. Blocks average 5 in the last hour. So I guess if you look at 10 minutes, there would, I guess, be 6 blocks. But we're talking about that average. So the reward, guys, remember the first block was 50 Bitcoin with only one difficulty, right? That number we looked at. And now fast forward into the future, because every 4 years or around 200,000 blocks, the Bitcoin halves the number of rewards it gives to the miners. So not only is it exponentially harder now to get Bitcoin, but you only get 6.25 Bitcoin. So we have 800, you get more details. Guys, the difficulty when we looked here, it was about 1. And you could get 50 Bitcoins for that. Currently, you only get 6.25 Bitcoin, and the difficulty is 30 trillion, guys. 30 trillion. And you highlight the mouse here, 30,283,293,447,737. So it's much harder to get Bitcoin right now. If you're interested in acquiring Bitcoin, do not look at the news. Look at the details of what's going on and understand so you can make a very good investment decision. If you're looking at this space as investment, this video is not about that. This video is about why we're here. Difficulty. The difficulty is a measure of how difficult it is to mine a Bitcoin block, or in more technical terms, to find a hash below a given target. A high network difficulty means that it will take more computing power, guys, to mine the same number of blocks, making the network more secure against attacks. It's extremely difficult. The network needs to be resilient. Look at the bear market right now. Way less value in the blockchain, which means if it's easy to attack the network, it's not good. And that's why the bear market is important. Are you going to live up to your standards, to what you promised? Are you going to be resilient in these tough times? Bitcoin has been resilient for all these years. So make sure you invested in teams. If you're looking at altcoins and other projects out there, extremely be careful. Read into what they're trying to do. Read into the teams. Use your own analysis to evaluate why you're here. So the current block reward on Bitcoin is 6.25 Bitcoin. There's other useful resources that like bitcoinblockhalf.com, which shows you when the next halvening, that's the coined term for when the Bitcoin block reward halvens. So you can see after 689 days, 16 hours, 37 minutes, and 39 seconds and counting, that 6.25 Bitcoin you saw is going to be sliced in half. So this is about 1.9 years from today, 1.8 years from today, 1.8887, whatever. That reward is going to be 3 point something Bitcoin now, maybe 3.125, depending on how you calculate. So which means it's going to be exponentially harder in 2 years' time to get a hold of a single Bitcoin. But at the same time, yeah, it's going to be exponentially harder if you're a miner, but at the same time, your reward is going to be also less. So it's going to be much harder if you set up computers to get a Bitcoin, but also the Bitcoin reward is going to be less. So it has a deflationary tendency, and you can see this infographic that shows you ever since Bitcoin, this is the exact opposite of the United States dollar, which is the global reserve currency whose effect spills over to other fiat currencies, which have never survived historically speaking. And we can remember with the German currency, I forgot what it's called, the inflation was out of the roof. We already have many countries today whose inflation is off the roof, and you actually heard Andreas Antonopoulos in that video actually talks about some of those countries. So ever since Bitcoin started ticking the heartbeat in 2009, its inflationary rate has been going down. It's almost zero, guys. So be careful what the institutions do, because there is extreme market manipulation when you look at the cryptocurrency space. Because the retail investors, they wait for the institutions to start buying in, and then they wake up and realize, oh, cryptocurrencies are very profitable. And then you bring in your $50, your $100 and put it in there. And once the market is primed, the institutions take out their liquidity, their money, and you lose every single time. Watch what they do, not what they say. That is the whole point of today's video. When you look at other metrics like coin.dance, it shows you the Bitcoin hash rate. You guys all know what that means, the difficulty and so on. Before we get into this, the hash rate, mining hash rate is a key security metric. The more hashing or computing power in the network, the greater its security, its overall resistance to attacks. Bitcoin has a hash rate of, I guess, 99%. You can look at the metrics, the numbers, using some of the resources we've showed you here. You can look at the Bitcoin hash rate. I think you can find it here. Exactly, it's here. 190,000. When you compare it to others in, what is this? Something e-hash, petahash, and sometimes it's measured in terahash, or depending on what you're looking at. And you can see there's exponentially higher hash rate with Bitcoin than others, which means it's much harder to attack the Bitcoin network. Guys, excuse me if I'm not, sometimes we know we can count up to trillion, billion, quadrillion, and after that things get a bit fuzzy unless you're a numbers guy. But the point of the video today is that Bitcoin hash rate is exponentially higher. If you look at some of the contenders that were claiming to be the true Bitcoin, like Bitcoin Cash, 0.6%. If you look at Bitcoin itself, it's almost topped up. Network nodes, compared to others, the so-called Bitcoin SV and so on. So Bitcoin is still ticking. Bitcoin is still extremely powerful. Bitcoin is still strong. And it's the foundation of the cryptocurrency space. That's where everything was born from. So if anything happens to Bitcoin, the whole space cannot survive, regardless of what you hear, regardless of what people tell you. It's extremely important to know that one of these technologies has the longest longevity, if those are the right words to use. Proof of work is what Bitcoin uses, which means theoretically, if you have more than 50% or more than 51% of the power of that hash rate, of that mining power, if your computers comprise 51% of the total Bitcoin mining power, then theoretically you should be able to attack the network, though it would be extremely expensive. So you have a nice site here, Crypto51.app, which shows you the proof of work 51% attack cost. This is a collection of coins and theoretical cost of 51% attack. So theoretical, note that word. So Bitcoin $729,000, Ethereum $657,000, and then when you go Litecoin, it exponentially decreases. Bitcoin Cash just $4,000. Bitcoin, I imagine it's much more than this, but this is a theoretical calculation. Ethereum as well. It's going to be really hard to take down the network. Litecoin as well. Bitcoin Cash, who knows? But as you go down the list, it gets extremely, you have to be really careful. But I guess it's not very, you can see some of these networks and you can see the metrics. The hash rate, 199,487 petahashes. You go to Ethereum, it dramatically increases, and others actually 10 giga. So you can look at the different cryptocurrencies. Maybe this is another way to make your decision. What is the interest? How difficult is it to take down that particular network? And how embedded is it into the current technologies like smart contracts? How is it going to support these new infrastructures like NFTs and so on? So you can use those metrics to make an educated decision. Now, guys, there's a lot. I'll post this particular article in the description because it describes some other stuff about that Genesis block that we've looked at, the Bitcoin block. So we're going to this whole thing of how that block was mined initially. Then Satoshi went on a 6-day rest, should I say, before resuming the actual network. So which means from the first block, that Genesis block, that Bitcoin will never move. There's those 6 days. So of course, some people want to affiliate that with some religions because the block was mined 6 days later. Then on the 7th day, basically the creator rested and the blockchain started. But that's more like, I think, cultish tendencies. People trying to assign what to what because it looks like whatever. But who knows? Who knows? No one knows. The whole point of today, so you can read this article. It goes into also the London Times, the secret message that was within the Bitcoin block. I hope I can find it. I think I could. Just allow me to type London Times. Maybe I'll find the ticker. Yes, there we go. So it's a secret message within the Genesis block. The text is a headline for an article in January 3rd, 2009 edition of the London Times about the British government's failure to estimate the economy following the 2007-2008 financial crisis. Nakamoto famously hated the idea of too big to fail financial institutions and wanted Bitcoin to be different in that regard. So most people think that Nakamoto's reference to the article in the Genesis Blocks code was a hint as to how Bitcoin is different from the big investment banks that needed government bailouts in 2008. Guys, you have to note, as a last summarization in this video, the network or the cryptocurrencies, when they fail, for example, Terra Luna, over 40 billion was lost. Nothing happened to the global financial system. Nothing happened to the larger cryptocurrency system. Yes, there was spillover, horrible. But the networks are continuing to tick. Okay, they needed no bailout. It's unfortunate some people lost. That is the whole point of this. Resilience, self-resilience built through this sort of community cooperation and basically looking at a network that does not have third parties that performs a very important role in this world today. So guys, the whole point of today's video is reflect back and remember why you're here before you make any rash decisions like capitulation, and make sure you actually do your own research to develop the knowledge to allow you to make intuitive decisions, especially if you're looking at this space as an investment. All right, guys, I hope you learned something from today's video, and I'll see you on the next one. Take care. Bye-bye.